Good morning. Today we will be discussing income statement adjustments. I will be focusing on accrued income and income received in advance. Before we even start, you need to know the financial year. Please note that different companies will have different financial years. And a financial year doesn't really have to be a period of 12 months. However, for grade 10 to 12, the financial year will be a period of 12 months. Some companies have a financial year that are more than a period of 12 months. Now, in this period of 12 months, we will earn income. Note that there's a difference between receiving income and earning income, okay? Only income earned must be recorded in the income statement. We no longer call it the income statement now. We normally call it the statement of profit or loss. Income earned always falls within the current financial year. So for you to earn income, it needs to be income that you have performed the service for, or you have, you actually are entitled to it. But it must be an entitlement that falls within a specific financial year or a financial year under review. Okay. Now, the matching principle requires income to be recorded in the financial year in which it is earned, even if it has not yet been received. So you need to record income that you have earned, even though you have not yet received it. Okay. Now, for example, I gave you an important example here where we have, as the entity, we have let out part of an unused building to earn a passive income. The building is let out to a tenant on the 1st of March 2022, and the tenant is required to pay $2,000 per month. Rent for February 2023 was not received. Now, when you calculate your rent for 12 months, note that this person, you're going to let property to them for 12 months, and they're going to pay 2,000 rand per month, meaning that for 12 months, we need to have received 24,000 rand. That's what we have earned because this person has stayed in our property for 12 months, okay? Now, note that 24,000 will be recognized as income, even if the entity only received rent for 11 months. So we will recognize income for 12 months, even though the entity has only received rent for 11 months. Income will be for 12 months. The amount received is for 11 months, okay? Now that 24,000 is recognized as income earned, and this amount must be recognized as income. Note that only 22,000 was received. The other 2,000, we haven't received it yet, so it is still receivable from the entity, from the tenant, and it's receivable by the entity. Now that 2,000 rand, we have not yet received it. However, it is an asset because it is income that we have earned, but we haven't received it yet. All right. So accrued income is simply income that we have earned, but we have not received it. It has not been received in the current financial year, but it has been earned in the current financial year. We have performed the service. We gave the tenant property until the 28th of February 2023, but we haven't received income for February 2023. So that is still outstanding. We still need to receive that amount of money from the tenant. Now, income recognized will be 24,000, and this 24,000, we are going to record it in the statement of profit or loss as income, as rent income for the current financial year. However, in our bank account, we only have 22,000 rand because that's what we have received. We have received rent only for 11 months. As I've said, the other 2,000 rand will be accrued income or income receivable and will be recorded in trade and other receivables. all the current liabilities of the entity, amounts that are owed to us. I mean, in this case, it's an amount that is owed to us. It's a current asset that is owed to us. It is a debt, okay, that is incurred by the tenant. Now, that 2,000 that is owed to us, we recognize it as a current asset, and it will be recorded in trade and other receivable because it's income that is receivable. We have earned it, but we have not yet received it. The amount of rent income given in the trial balance will always be the amount of rent that you have received. So it'll always be a rent income amount that comes from the CRJ. Okay, we have received it. I hope that is clear. So it is the total that we received from the CRJ, and it will be on the credit side of your rent income. We have received it. So the amount that is in the trial balance for rent income represents an amount of rent received in the current financial year. Let us look at this example here. It is an extract from the pre-adjustment trial balance for the year ended 28th February 2022. Rent income is 33,000 and commission income is 11,200. Note that income increases on the credit side. So according to the trial balance, we have received rent worth 33,000. We have received commission worth 11,200. So that's what we have received in the current financial year. But receiving those two amounts does not mean that we have earned it. We've just received those amounts, but it doesn't mean we have earned it. Okay. Now, part of the building has been let out to a tenant since the beginning of the financial year. The rent for February 2022 has not yet been received. And then they tell us that for commission income, 8,800 is still owing in respect of commission income, meaning that whoever was supposed to pay us commission, they haven't paid us 8,800 that we are entitled to. Means that we have performed the service, we have earned that 8,800, but we haven't received it yet. Okay, but note that for the entire financial year, commission income received is 11,200. Now, in this case, please note that our financial year end, it is the 28th of February, 2022. You need to draw a timeline specifying when the beginning of the financial year was. Now, please note that our financial year is up until Feb 2022, meaning that it started on the 1st of March 2021. We don't know how much we received for March, so I'll just write that as X. For April, we'll also receive X amount. All of these amounts are recorded in the CRJ for those specific months. In May, in the CRJ, we will record the X amount of rent. In June, we'll record the X amount of rent in the CRJ. We'll do the same thing in July and August. We're gonna have September, October, November, December, and then we're gonna have January 2022 and February 2022. However, please note that for Feb, I have a question mark because it specified, the adjustment specified that rent for February was not received. Rent for February was not received. So I'm gonna highlight that. The rent for February 2022 has not yet been received. Remember, I said to you the amount that is in the trial balance represents amounts of rent that has been received for the current financial year. Now that, what I've highlighted there, simply tells me that that 33,000 is only for 11 months. I'm missing 1 month, the February rent. We have earned it, but we have not yet received it. Remember, when we prepare our financial statements, we prepare them as at the end of the financial year. We look back from the beginning of the year as to how much income we have earned up to the end of the financial year. In this case, our financial year will be for 12 months, which started on the 1st of March, 2021. However, we are missing 1 month rent. Question is, how do we calculate that 1 month rent that is missing? If you add all these rentals that you have earned since the beginning of the year, you realize that you have earned 11 times X amounts of rent. 11 relates to the 11 months that you have received the rent, because that amount that we have in the trial balance, the 33,000 rent, it's only for 11 months. How do we know that? Because we are told that rent for February has not yet been received. So I'm missing that rent for February. So we know that 11 months of rent amount of X amounts of rent will amount to 33,000 rent. Now we will simply take that 33,000 and divide it by 11 to determine the monthly rental amount that we're supposed to have received. Meaning per month, we were supposed to have received 3,000 rent. So 3,000 rand for March, 3,000 rand for April, 3,000 rand for May, 3,000 rand up to Feb. So it means that for Feb, we were supposed to have received the 3,000 rand, but we have not received it. We have earned it, but we have not received it. Meaning that our rent income has been understated. We did not earn 33,000. Yes, we received 33,000, but we did not earn 33,000. There's 1 month's rent that is missing. Now, how do we record this? We will start by recording it in the book of first entry, which in this case, it will be the general journal. Because it's missing, it is owed to us. It doesn't qualify to be recorded in the CRJ. CRJ is about money received. We did not receive that rental amount, which is missing for Feb. We can't take it to the DJ because we were not selling goods on credit. Okay, remember, DJ, we only record goods that we sold on credit. So in this case, this is not a good. It is simply a service that we performed. So it cannot go to the DJ. It cannot go to the debtors allowances. We know debtors allowances are goods that were returned to us. It cannot go to CJ because we are not buying on credit. It cannot go to CAJ because we are not returning goods to the creditor in this case, in this specific case. So because it doesn't qualify to even go to the CPJ or PCJ, remember CPJ and PCJ are all about payments. We are not paying here. We are recording the amount that we have not yet received. So if it fails to be recorded in all the other 6 journals, it can only be recorded in the general journal. In the general journal, we record amounts that cannot be recorded in the other journals. First of all, this amount of 3,000 that we are missing, we have not yet received. It is a debt that is owed to us. Any debt that is owed to us is a current asset. We are going to recognize what we refer to as accrued income. You can simply write accrued income or income receivable. This is income that we have earned, but we have not yet received it. And then we are going to increase our rent. Remember, our rent is sitting at 33,000, but that 33,000 rent is what we have received for 11 months. It is not what we have earned. For us to record what we have earned, we need to include the other 3,000 rent for Feb that is missing. So that is why we are going to credit rent income. We will debit accrued income on the debit side because assets increase on the debit side by 3,000. So we are going to debit accrued income by 3,000 and credit rent income by the same amount of 3,000 rent. For now, please never mind the 11,800. I will actually explain thoroughly just now. This is just for rent. Please note that I debited my accrued income with that 3,000 rent and I credited my rent income with the same amount, which is 3,000 rand. Accrued income is debited because that is a current asset. It is the amount of rent that is owed to us. And we credit rent income because that is income increasing. Our rent needs to move from 33,000 to 36,000 because for the entire year, we have earned rent for only 12 months, which amounts to 36,000 rand. But we've only received rent for 11 months, which was 33,000 rand. We've got 3,000 rand that is missing. That 3,000 rand, we need to increase our rent income by that 3,000 rand so that we take it up to 33,000 rand. So by recording it this way, I've now increased my rent to 33,000 rand. I've debited my accrued income with that 3,000 rand. That is only for rent. Fortunately, when it comes to commission income, it was given to us. We did not have to calculate it like we did calculate it with rent income. With commission income, they are simply telling us that 8,800 is still owing in respect of commission income. So it means that 8,800, the fact that they concluded that it's still owing, it means that whoever was supposed to pay us as the business, that 8,800 has not done so. So the people that have only paid us, they've only paid us 11,200. We still have the 8,800 missing that is still owed to us. We earned it, but we have not yet received it, resulting in an increase of our accrued income. Now, it now makes sense why we have that 11,800. We are going to debit again accrued income by 8,800 and credit commission income. Note that our commission income at the moment is sitting at 11,200. When you take that 11,200 and add the 8,800, it should give you 20,000. Let me just confirm. Yes, it does give you 20,000. So it means that our commission income is moving up. It is increasing. But because it is income, it will increase on the credit side by 8,800. Now our commission income is sitting at the correct value, which is 20,000. Just to explain the debit side of 11,800, that 11,800 is made up of the 3,000 for rent income as well as the 8,800 for commission income. So for us to record this accrued income, you can record it as accrued income, or you can simply record it as income receivable, which is simply a current asset. It is a receivable. It's income we have received, but we have not yet it's income that we have earned, but we have not yet received it. I repeat, it is income that we have earned, but we have not yet received it. So it is still owed to us. So to get that 11,800, it is simply the 3,000 that comes from rent plus the 8,800, which is for commission income. So in total, our accrued income or income receivable will be 11,800. When we record this in the statement of comprehensive, other call it the statement of profit or loss and other comprehensive income, I will simply call it the statement of profit or loss, because it's either you're making a profit or you're making a loss. When you record this in the statement of profit or loss, this is how we are going to record. Now, what do we record in the statement of profit or loss? In the statement of profit or loss, we only record income earned and expenses incurred in the current financial year, not income received and expenses paid. No, we only record income earned and expenses incurred in the current financial year. And when you look at the trial balance, we have 33,000. Is it income earned? No, it's not. It's income received for 11 months, because we have earned income for 12 months, not for 11 months. That person stayed in our property for 12 months, not for 11 months. Okay. Commission income we have earned is not 11,200. 11,200 is commission income we have received. For me to get proper rent income earned, the actual amount of rent income earned, I'm going to take the 33,000 rent that I've received and add what is missing, what is still owed to us. I've earned it, but it was not paid to me. It is still owed to me. And how much will that rent be? And that amount will be 3,000 rent. So you add the two amounts, rent received plus rent not yet received but earned, it'll give us 36,000. Okay. For commission income, we have 11,200. So that 11,200 is what we have received, but it's not what we have earned. For me to determine what I've earned, I'm going to take that 11,200 and add 8,800. And that'll give me my total commission income earned, and my total commission income earned will be 20,000 rent. Then I'm going to go to trade in other receivables. In trade and other receivables, I will simply have what we call accrued income. It is the total income that is still accruing to us. We are entitled to it. We need to receive it, but it was not yet received, but we have actually worked for it. We have earned it. So it's entitled to us. Now, the fact that it's entitled, we are entitled to it, it means that someone is obligated to give it to us. And it's the person that we have performed the service for. In this case, we gave them property. We performed a service that entitled us to get a commission on the income that they earned. Because we performed the service on the income that they earned, we are entitled to commission income that we are earning. We are earning a commission income for that. Okay, so in total, our accrued income will be the 3,000 rand plus the 8,800, which will give us 11,800. Okay. Now, I just want to go back a little bit, okay, because I've actually jumped to something. I just wanted to explain this part first before I calculated what was supposed to have been calculated before this. Please note that this is the hierarchy. It goes to the journal, and then it goes to the general ledger, and finally it will go to the statement of profit or loss, which is simply your statement of profit or loss and the related notes. I jumped to the second part, which is the general ledger. Okay, I'm going to go back to the general ledger. Now, in the general ledger, just to explain what is going on, we've got rent income, which is a nominal account section. I'm not going to close it off yet because you guys don't know what closing off is at the moment. So rent, you know that it's income, and just like any other income, it increases on the credit side. I'm going to put in the balance brought forward, which is the amount. This is happening all at the end of the financial year. This is the amount that I got from my trial balance. The amount that I got from my trial balance in this case will simply be 33,000 rent. Is that the actual amount of rent that we have earned? The answer is no, because there's still rent that is accrued, and the rent that is accrued will be the 3,000 rand, and in total, the rental amount we have earned will be 36,000 rand. Now, because this is the end of the financial year, like this is the last day of the financial year, we cannot have balances, especially for nominal account section like your rent income. We're going to transfer them to one account, which we call profit or loss. I will explain later on what profit or loss, what are we going to do in the profit or loss in this when it comes to rent income or all your income and your expenses. So we're going to take it to another account. So it's like we're just taking all our income earned to that account, but we're going to take it to the credit side of that account. Okay, so we'll take it to an account which we call profit or loss. Profit or loss account is simply an account that summarizes what I did earlier on, not just your statement of profit or loss, but it's simply a statement of profit or loss which is reflected as a ledger account. Okay. Now, just like in the statement of profit or loss, we only take into that statement what we have earned, especially when it comes to income. Okay. Same with the commission income. Commission income, it's a plus, it's a minus plus, okay, meaning that it increases on the credit side, it decreases on the debit side. It increases on the credit side, it decreases on the debit side. Note that we did this earlier on when we did the accounting equation. Please check out and it's simply a video on accounting equation where I explain that any account that increases owner's equity, increases owner's equity on the credit side. Any account that decreases owner's equity, decreases owner's equity on the debit side. So in this case, our commission income balance will be on the credit side, which was 11,200. But that is not the actual amount that we have earned. We need to calculate the actual commission income earned. To calculate the actual commission income earned, we will take into account a commission income that is still accrued to us and still owed to us. That amounts to 8,800. Taking our commission income up to 20,000. That 20,000 is commission income earned, and it will be recorded on the debit side, which is just the balancing figure. We're transferring it to a statement of profit or loss. In this case, it's a profit or loss account. We'll deal with that later on, all right, which will all be done in the general journal, and the amount will be 12,000 rand. Okay. These amounts will simply be taken to another account which we call accrued income. In that account, we will have it as 11,800. But I will start by just showing you how I got to that 11,800. It comes from rent income, which is still owed to us. Please note accrued income is an asset account. Others will write it as income receivable, but it is still an asset account, meaning that it goes up on the debit side, it goes down on the credit side. So in this account, you're going to have accrued income, and it will be 11,800. It will be 3,000. In this case, our accrued income will be made up of rent income, which is 3,000 plus commission income of 8,800, taking it to 11,800, which is our total. It will have a balance brought down because commission accrued income is our asset. Therefore, it will have a balance. Unlike your nominal accounts do not have balances at the end of the year because we are closing the year. We need to calculate our profit or loss for that year. Okay, but this one we're going to take it to the following year, which will be 11,800, which we can reverse in the next financial year. So we will have 11,800. As I've said, we will do profit or loss account later. In most cases, I prefer to do the statement of profit or loss because they're pretty much the same, okay? And for now, guys, all we know for now is that all income earned will be recorded on the credit side of profit or loss account, and all expenses incurred will be recorded on the debit side of the account. Just to rewind and take you back to what we have done so far. In the statement of profit or loss, which is what I prefer to have after our general ledger, but in this case, I just wanted to explain the profit or loss account before I explain the general ledger, just for you to see the whole picture. In the statement of profit or loss, we did talk about this. We had rent of, our rent was simply 33,000. We added the 3,000 rent, which took us to 36,000 rent. For commission income, we had commission income of 11,200 and we took it up to 20,000. Our last account will be what we refer to as trade and other receivable. And I explained that we will take our total amount that is still owed to us, which is 11,800, made up of the 3,000 from rent income and the 8,800 from our commission income. Just to take you back to how we recorded this, please note that when we recorded this in the general journal, we debited accrued income, and we debited accrued income by 3,000, okay? And we credited rent by 3,000. All right, because we have earned that rent. That's why it went to 36,000. So we're increasing it to 36,000. This is back when we did the general journal. And then we also increase our accrued income by 8,800, which was for commission income. And our commission income also went up by 8,800, taking our accrued income to 11,800. And I did explain that what is accrued income? Accrued income is an asset, okay? Just like any other asset, it goes up on the debit side. And when it comes to rent and commission income, both of them are income, and income goes up on the credit side, okay? And then I took you to the general ledger where I said, you'll have your rent income, which was 33. We're going to increase it by 3,000, and then it's going to go to 33,000, which is the amount of income earned, which we take straight to our profit or loss account as 36,000. And also we had commission income of 11,200. We took it up by 8,800, and it went up to 20,000. It went up to 12,000. Actually, our commission income didn't go up to 12,000. It went up to 20,000, because when I add that 11,200 with 8,800, it should give me, it does give me 20,000. Now, in our profit or loss account, which is the same as the statement of profit or loss, we will have 20,000 plus that 36,000, of which in the statement of profit or loss, we said that is our operating income. So our total operating income will be 36,000 plus that 20,000, right? And that is the income we have earned from rent. It's income we have earned from commission income. Okay, and then after the general ledger, as I've said, we'll have rent income. I did explain this. I won't go into detail that much. So I just wanted to show you that our operating income will be 56. This 56,000 is made up of 36,000 plus 20,000. 36,000 plus 20,000 will give us that 56,000, which is what we call operating income, or total operating income. I've already explained trade and other receivables. Okay, for more videos, guys, please check out my YouTube and check the next video that I will post shortly. Please don't forget to subscribe and like my channel. Before I even forget, please go to Google Classroom. I will attach the link below where you can get this work and try to do classwork 1 before you watch the next video. That's all.